The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Happy Monday, everybody. You're watching Squawk Box with Arabella Gamedi, myself, Steve Sedgwick, and these are your headlines. Well, Asian equities are bouncing. It was a down week stateside, but we had an almighty rally on Friday. So investors looking a little bit more positive, but they have got a busy week, a trio of central bank decisions and a slew of key data. Well, talking of key data, China's factories see robust profit gains in June, offering a ray of hope to authorities as they grapple with a slowing economy.
UK Chancellor Rachel Reeves is set to unveil a review of public finances today, with key infrastructure projects potentially on the line. As she tells CNBC, more money will be available to invest in public services.
This is going to be the most pro-growth, the most pro-business treasury that this country has ever seen. So I will work with business to make sure that we're doing all we can.
Republican presidential nominee Donald Trump stops short of promising to establish an official U.S. Bitcoin strategic reserve currency, as he tells a crypto conference, never sell your Bitcoin.
If crypto is going to define the future, I want to be mined, minted, and made in the USA. It's going to be. It's not going to be made anywhere else. And if Bitcoin is going to the moon, as we say, it's going to the moon, I want America to be the nation that leads the way.
There you go. Very provocative headlines. I have no idea if Donald Trump owns Bitcoin. I don't know if he hasn't, but seeing a US president saying Bitcoin's going to the moon. I say president, ex-president, but potential president. What an extraordinary comment. Anyway, we've got way too much to talk about than just Donald Trump, although we will speak about him during the show. Heineken. Outlook for the full year is updated. Operating profit, which is the BEIA, expected to grow organically in a range of 4 to 8%. The net growth figure in the first half was 6% BEIA. Beer volume organic growth 2.1%, volume growth 9.2%, operating profit showing organic growth of 12.5%. They're working on an effective interest rate of 3.5%. They're saying they expect investments in capital expenditure related to property, plant and equipment and intangible assets to be somewhere in the region of 9%. Improvement relative to previous guidance in the outlook of 29%, including further insights into Brazil's tax changes, which is very interesting. I'm going to park that one there, but it's safe to say we are going to be speaking to the CEO of Heineken, actually, Dolf van den Brink, to break down those numbers at 8:20 Central European Time. That's a first on CNBC interview. Well, I tweet the headlines as I read them on air to you live just now, Arabile, because the fact of the matter is, what an extraordinary set of moves we had last week. Stunning volatility, VIX peaking on Thursday and then coming off aggressively as we got this big rally.
Yeah, what did it peak at? Around 19 or so, somewhere there, and then coming off a little bit was that VIX. So certainly a lot of volatility that you saw across last week, in fact, and significant gains then on Friday. But let's remember that for the week then, you had also seen quite significant losses actually for a lot of these counters, particularly for the S&P 500 and the NASDAQ composite, as that tech sort of rotation then comes into play here. But more than 1% gain for these tech-heavy indices. So we did, of course, get that PCE print coming mostly in line then as anticipated. And that kind of sent a little bit of a sentiment of positivity then across this market. The Dow Jones Industrial gaining 650 points then. And this is pretty much the volatility we're speaking about then, especially to close off that week. We saw that deep drawdown then, particularly middle of the week then, and just really vacillating throughout the remainder of the week as well. Here's your tech stocks then and what happened. And really just across the month, this is what we're looking out for. Of course, we have the end of the month then coming through on Wednesday. And initially, you had seen a few losses in this. Now, we'd been speaking about a tech rotation and into some of the smaller caps, for example, and significant enough to be at play here because the Russell 2K did actually gain last week, and it was the third consecutive week in which it has actually moved higher, outperforming both the S&P 500 and the NASDAQ. But that tech rotation that we've been speaking about, well, for the month of April, technically overall hasn't looked like it's fully there in play right now. Yes, perhaps slowing down, some might say, but really when you see gains for Meta of around 8%, Nvidia still going up month to date nearly 13%, well, big question marks whether that rotation is actually still happening. Here's another sign of whether that rotation is still in play. Onto your treasuries picture then on this one. Really, one will this week be focusing more, I suppose, on Japanese government bonds as we head towards that interest rate meeting there. Plus, of course, you do have the Fed set to put out its interest rates decision, although it does feel like the Japanese central bank may be having a more of a live interest rate decision in play there. Hike could certainly be in play on those interest rates as well as we head towards the BOE. So 10-year Treasury note that stateside 4.17. Let's remember last week trading around 4.2. So a drawdown from that mark of at least 3 basis points then to close out the week. 4.36. Also then on the more rate sensitive 2-year note. Out of the Asian market then, Asian stocks on the up today. The Nikkei leading the gains there, 2.4% higher so far this morning. The post-lunch session in the Hang Seng is nearly 2% higher as well, 1.24% higher for the Kospi out of South Korea. Then suggestions of an escalation in attacks then out of the Middle East have also prompted a few question marks out of the currencies, and we'll focus on that. Mitsubishi Motors, though, the top gainer coming out of Japan, higher by nearly 6%, Steve.
Right, let's ask some of those questions that you've been pondering at the wall. Michael Yoshikami is the CEO of Destination Wealth Management. Michael, always a pleasure, sir. Thank you for staying up late or getting up early, whichever it is for us. Michael, the rotation question, front and foremost for many investors, but you still don't think that the AI-inspired tech is quite cheap enough to dip your toe?
Yeah, not quite yet. I mean, even though you have a number of the AI stocks down 15, 20%, still trading at super high multiples on a relative basis. I think some of the more cyclical stocks, some of the more dividend-oriented stocks probably are appealing now, but we're getting close. I don't think people should give up on big tech. I know there's this sentiment there's going to be this massive shift into small cap, massive shift into anything but tech. I still think tech is going to be leadership. Just got to be careful with valuations, Steve.
The problem is the market, as you know better than I will ever know, doesn't wait for the right valuation to get gung-ho on any story as well. In fact, it works both directions as well. The fact that these stocks are cheaper, does that actually make you think, look, I'm close to where I'd really like the valuation, but actually it's close enough?
I don't think it's close enough, but it's definitely getting closer. I don't think it has to go down another 20% overall tech. If you go down another 5, 10%, I think you start to get into opportunity territory. So you're absolutely right. These are momentum stocks in the end, right? We see what happens to momentum stocks. There have been some that have had some challenges. Tesla, for example, is one that comes to mind that was a momentum stock that certainly has its difficulties as of late. So if you're in a momentum stock, you better be sure about the river that stock is in. In other words, the direction that they're going as a company is going to go with the environment, such as AI and chip makers in AI. Because if you don't, you're going to get straw out to dry and you're going to be in a dot-com situation again. And we don't want that, obviously, for investors.
Michael, so far we've gotten Tesla and Alphabet in this market picture, in the earnings side of things then. We have the others coming as well this week. How significant will this earnings picture be this week then for the determining factor of that leadership that you speak about still being tech?
I think it will be significant. Tesla has some unique challenges, obviously. Google, it was more, I guess, about softening ad revenue. Well, it's still a pretty reasonable report, and certainly not capitalizing fully yet on their AI initiatives. But I do think investors are looking for some confirmation that they can trust what their earnings are going to look like for big tech. And I think if you have earnings that are halfway decent and you have the Federal Reserve continue to posture as if they're going to be accommodative, I think that actually points a pretty clear positive picture going forward into the fall.
How much more, shall we say, election risk is involved in this market now, following on from what you've seen with Vice President Harris coming into the race now as well, and just the upturn you've sort of seen as well in her numbers?
Yeah, well, so let's be clear what data says the presidential election means, say, 3 months after the market. The data suggests it doesn't matter. It doesn't matter whether it's whoever it is. What does matter is in the lead up to the election, you're going to have lots of trial balloons floated. We had one that was just floated today, where former President Trump talked about Bitcoin, for example, and what might that do for Bitcoin-related stocks. So I think you're going to see a lot of sentiment swings based on proposals. Let's say someone comes up and says insulin is now going to be $1 per treatment. Well, what is that going to do to insulin makers, right? So it's going to be the same thing with automakers. What if automakers are going to lose subsidies? What if automakers are going to be penalized because of taxation coming from Mexico? So I think that's what investors need to be looking at is up to the election. What swings happen based on sentiment, based on trial balloons? That's where I think the opportunity is, rather than thinking if so-and-so gets elected, it automatically means the market's going to go up, because history has proved that's just not the case.
Michael, interest rate decisions here, the Bank of England, we think could be interesting one, but the Federal Reserve not as interesting this time around. Is it all about the signalling for September?
Yeah, probably. I'm of the belief that in all likelihood, there will be signaling of lower rates, as there already has been. I'd be kind of surprised if at the next meeting they actually cut rates. Although, as I'm sure you know, market or economist sentiment and so-called market watchers are factoring anywhere from 2 to 3. We think 2, maybe on the outside, maybe 1 to 2 is more reasonable. But I do think the Fed is going to continue to drop interest rates, to push interest rates lower by threatening accommodation. Remember, the Fed changes rates with their reserve rate, but they also change rates with their words. And they've been active. Powell's been very active doing just that.
Let's just talk China as well, if you will, very quickly. Still remaining bearish there. We've seen the luxury numbers as well come out just last week. How are you seeing that economy for the remainder of this year, one, and I suppose the market as well?
Well, for the remainder of this year, I would not be optimistic about what's happening in China, simply because what's happening in China is not a 3-month issue. It's a 10-year issue. They're really remaking their economy to be more consumption and less export. So that's going to take time. Middle class is going to get bigger as a percentage. GDP is going to go down. Investors aren't going to like that if they're chasing EM returns. As for the U.S. market, if the Fed is accommodative and we don't have any crazy earnings headlines, which we could every time earnings is virtually announced, but we think it's actually a pretty positive environment, despite the market rallies that you've seen in the last 7 or 8 months. Pretty positive environment for equities going forward, if in fact the Fed cuts, and we think they will.
Michael, lovely to see you. Thank you very much indeed for joining us. I always learn something when we speak, and we'll do it again soon. Michael Yoshikami, CEO of Destination Wealth Management. Let's move a little bit further south. Venezuela's President Nicolás Maduro has won a 3rd term in office after securing 51% of the vote. The result comes despite multiple exit polls which suggested victory for the opposition candidate, Edmundo Gonzalez, who garnered 44% of the vote. Now, in the wake of the result, the US Secretary of State, Antony Blinken, voiced, quote, serious concerns that the results announcement does not reflect the will or votes of the Venezuelan people. That is what the opposition is saying as well. Venezuela's Mercado says the opposition candidate Edmundo Gonzalez actually won 70% of the vote. That's according to the opposition. Says support for Gonzalez was obvious. Multiple polls and counts show opposition victory. So the opposition questioning by a dramatic degree the level of victory for Mr. Maduro.
Well, coming up on the show then, UK Chancellor Rachel Reeves telling CNBC that the Labour government will be pro-growth as well as pro-business, but is also expected then to unveil a series of spending cuts and tax hikes later today. We'll discuss that next. Also ahead, Donald Trump looks to rally the crypto community. Speaking at the industry's biggest conference in Nashville, we'll bring you some of the highlights of that. Plus, as Philips posts earnings, we'll bring you the first on CNBC interview with the CEO. That's Roy Jacobs. Stay tuned.
Ambition to me is about doing better.
I think ambition creates a pathway.
The best advice I can give to someone starting off a career is don't have a career, have lots of careers. Try loads of different things.
Talk to people and put your ambition out there.
I don't feel that I've hit peak ambition because it's a learning journey.
CNBC is where ambition meets opportunity. What does living ambitiously mean to you? Hear it from our CNBC anchors, reporters, and global business leaders on CNBC.com.
Right, we've got Roy Jacobs waiting in the wings over at Philips. Numbers, second quarter beat, it looks like, boosted by North American orders. I want to stop with the ad-libbing there and just get straight to Roy, because I've got a lot of questions for him. So, Roy Jacobs, the CEO of Philips, lovely to see you again, sir. Look, this is quite a momentous set of numbers in many ways. It's the first set of figures since that late April, early May revelation update that actually you've finally got a $1 billion major litigation settlement. Roy, before we look forward and talk about all the things we want to talk about, the current set of numbers, is that it now for sleep apnea? Are we done?
So we are indeed very encouraged by the numbers that we showed this quarter. I think we are building, as you said, on the big settlement that we had in the first quarter. It was a great next step in dealing with the sleep and respiratory care dossier. But actually what was important that we now can fully focus on our innovations, how they can help healthcare and consumers. And that actually showed in the results that we have been brought forward this quarter with 9% order intake growth, solid sales growth, and strong profitability improvement and cash improvement. So a very robust set of numbers that also gives us strong confidence for the full year guidance that we have been giving earlier.
Sorry, that's great. But the Respironics and the apnea side of problems, the litigation, are we over the line on all litigation there, Roy? Can the investors look forward to just looking at those numbers you just mentioned rather than looking backwards?
Yeah, what we said also earlier was that the settlement in the US gives us finality on the US case. There are still cases going on also outside of the US, and we have the DOJ investing ongoing. But that's something that we will keep giving a lot of priority and focus on. But most important is actually by getting that settlement behind us, gives us really all the effort and forward view on bringing our innovations to the markets. And that's actually, I think, what also has shown in the business interest. We have big deals that we close across the world, in North America, but also in Europe. We see momentum both across our imaging business, interventional business, monitoring business. So actually we see momentum building across the company, and that's very encouraging because that's where we should be focused on delivering great innovations to support the world.
Yeah, fabulous. Okay, we can draw a line onto those questions for now. In terms of where you're seeing the growth, I get it. North America is the driver. You're saying also Europe's not looking bad as well. But when I look at Europe and I look at companies such as yourself talking about Europe compared with other parts of the world, they're underwhelmed with European operations. That's not your experience, or actually Europe's okay, or actually Europe is troubling?
So we see, I would say, a differentiated picture. As you call out, indeed, North America, clearly the strongest market in the world. From a healthcare perspective, significant demand. We see very strong order uptake, very strong prospects also for the way forward. Then I would say in Europe, we see a more differentiated picture. We see actually consumer sentiment picked up. We also saw actually a good sales growth on the consumer side in Europe. Then we saw on the healthcare side, it is still more modest, but actually it has been in line with what we have seen in the last quarter. So I would say there's no significant change in that momentum in Europe on the healthcare side. If I look outside of Europe, then of course in the growth markets, like in Indonesia, like in Middle East, we see really new momentum coming up. We're discussing with the governments there and with the customers how we can support them. Also some big deals in the pipeline. So I would say there's quite some exciting momentum outside of Europe as well. And then, of course, we have China, where we're working through improving the situation. We have been very active in that country for 100 years. We also know they're going through their own changes. They have had the anti-corruption measures. Also, they put in now a stimulus program. So we expect China to improve. But in the global scale, North America clearly leading, and we are very well positioned to capture the opportunities that offers to us.
Roy, I'm going to touch on China in just a bit, but really just to follow on the US, especially in your Respironics and respiratory business then. Are you gaining the kind of traction you'd like to outside the US?
Yeah, we see actually very positive momentum in sleep and respiratory care outside of the US, but also even in the US, because we also are still active with part of the portfolio in the US. And SRC actually has shown growth side outside of the US, also strong profitability improvement, because we are now also really right-sizing the business based on the clarity that we now have. So actually sleep and respiratory care was a contributor, a positive contributor in the quarter, also after last quarter. So actually we see that really adding to the portfolio strength that we have across. I think if you look to the big deal that we had with Bon Secours Mercy in the US, that's a bigger monitoring deal. So we see also other parts of the portfolio really stepping forward in North America, but also sleep and respiratory care has been contributing.
Roy, with that weakness that you are seeing then out of China, especially a sustained weakness in that business, does that mean you kind of slow your investment in China, especially and across the Asian region, or do you sort of search for pockets of growth there now?
No, I think excellent question. Indeed, it is. You have to go where the growth is. And also China still fundamentally holds good growth. It's one of the biggest populous countries of the world, a lot of healthcare demand. And fundamentally, we have no doubt that is an important market to go after. We're also well positioned, more than 100 years in China. We have localized our portfolio, so 90% is made in China for China. So we're ready to capture the demand when it happens. What we have seen, there was a bit of slowness in the recent quarters, also because of new government measures that they took on anti-corruption. But now they also put a stimulus program. So actually, we expect that will improve. But as you say, also in the APEC region, in the Asia region, we see really opportunities to grow. Indonesia is extremely active to build and strengthen their healthcare sector. So we have actually seen good pipeline of opportunities coming forward. We are in close collaboration with that government. We also are in close collaboration with, for example, the Singapore government. They are very forward-leaning on data and AI. So we're looking at how we can get to an integral data play for the full country, where actually we connect the different monitoring, imaging data, and then put AI on top. So actually we see Asia still as a very important region that we also keep investing in, making sure that we can cater to the local needs.
I know that you talk to all shareholders, but just interested to see what John Elkann is saying, the Agnellis at the moment, about the current strategy. Obviously, they are huge backers of you, the largest shareholder with 17.5% now, possibly going as high as 20% as well. Do you have any insightful comments about where they want you to go, which side of the business they see growing the most?
No, I think we are very encouraged, as we said earlier, that actually AXA joined the investor side of Philips. We also saw more confidence actually in the quarter as they upped their investment in Philips. They were at 15%. Now we have seen that they crossed the 17.5%. So even after the settlement, they see that actually there's a lot of value to be untapped. They strongly believe in the plan that we presented. When they actually, before they stepped in, they did a lot of study into the plan that we were going after, which on one hand was looking after the big healthcare opportunity with the innovations that we have in monitoring, imaging, interventional, and in enterprise informatics. But they also see that more care will be provided in the home. So this consumer care side that we have is an interesting combination. So actually we can cater to consumers and self-care and then take care of patients in the hospital, but also bring them back to the home thereafter. So that's something that they're excited about. They also strongly believe in the technology side. Of course, they have their own portfolio of companies with a lot of technology depth. So they see where data and AI towards the future is important. So they also support that trust of our strategy to further dial down on that as we are leading in enterprise informatics, in health informatics, and that will only grow in importance towards the future to make the system more productive so that they can deliver more and better care.
Roy, I've got a hard out 25. It's up to you if you take the next question. What's the most exciting device I should be about being at home? I love a bit of home healthcare.
So at the home, I would say very exciting is our monitoring device, the e-patch, that actually can really watch over you, look at your heart if it's in good health, if you have any problems currently that should be detected or something that you should worry about. So actually prevention and also preventative monitoring is something that I would encourage you to look after so that you stay fit, we all stay fit, and actually we get a great life as a result of it.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.